Meantime, also great news when it comes to the Fed rate cut, Aisha. You had the global markets actually that went on to surge quite decently. In fact, you had the US markets which clinched a record high. This is post that 50 basis points rate cut that was taken by the US Federal Reserve, the first cut, in fact, that we witnessed in the last 4 years. There was a little bit of choppiness actually after that initial announcement, but in the days following it, you did see a decent close coming in for the US markets. Commodities actually managed to rebound, and you did see the Dow close in at an all-time high above the 42,000 mark. All three of the major indices for the week gone by did manage to gain strength. And you also had the commodity prices, like we said, that did manage to rebound quite decently. And Nikunj, just taking a look as to what happened after the rate cut, it seemed that it was a fairly decent close for the global markets.
See, the rate cut happened middle of last week, and we did not get a good reaction to that. It appeared that it could be sell on the news kind of a global market financial setup. But Thursday, Friday, things improved. Crude bounced back, metal stocks, they bounced back, volatility has calmed down, Nasdaq's had a big day. So it's very clear that the rate cut impact now seems to be kicking in as per logical conclusion, and it is not turning out to be a buy the rumor, sell the news kind of a market. Delayed, late, but logical is the market reaction to the rate cut. What is the logical reaction? Commodity prices have bounced back, especially crude. Metal prices are looking good to go. Emerging market inflows have started, especially into preferred markets like India, and the giant flow of Friday is reminiscent of that. So if you have to really conclude from a market standpoint, which is the global setup, the Fed rate cut has come and gone, and that in a sense has kept the liquidity or the cheap money or flows into emerging markets and commodity argument alive. This week is the US jobs data. So if you frankly look at US market, what were the three concerns for the Fed? Growth, which they have taken care with the 50 bips rate cut, soft landing is likely. B, inflation, which is where I think there is an advantage in terms of the direction for investors. And C is the US jobs data, which is unemployment. And that comes later this week, and that I think would be the next moving mark. So till that data comes out, from global market standpoint, it could be technicals, it could be more liquidity, and it could be more outperformance in emerging markets.
Yeah, in fact, it's a little sedate if you ask me across Asia. Of course, the close for US markets on Friday as well was largely quietish after that big rally that came by post the Fed cut on Thursday. Asian markets mostly higher, largely follow through from not just the Fed rate cut but other regional central banks as well. Remember, you had both China as well as Japan central bank commentary coming in. And yeah, the Reserve Bank of Australia as well has begun its two-day policy meeting today, where central bankers are going to decide about the country's monetary path. Singapore, of course, is set to release the August Consumer Price Index as well. The core CPI has already risen about 2.6% on a year-on-year basis, as opposed to 2.5%, which the street is penciling in. The GIFT Nifty then this morning, it's indicating once again a big move, and we're inching closer to that 26,000 mark. That was a surprising price action, right? Because Thursday, we were the world underperformers, Nikunj, and Friday we came back with a vengeance and caught up with the entire global rally.
So Aisha, you are looking at a market which is divided in two. One is Nifty, which is giving you a different kind of a market view, because markets, especially what happened on Friday, that late surge, I think was excellent. But beneath the market, there is a lot of churn, and which is what I think is the trend for me, that not everything in large cap, everything in small cap is up. Not everything in mid cap is up. So we are going through what really could be called as a very visible churn. Imagine if you are in bit defense and some of the PSU stocks last 1 month have not been very gratifying for you. Similarly, if you are in large cap stocks, the fact that Nifty is at an all-time high has not been a very bad experience per se. What is interesting here is that if one really looks at the trader screen, which is what we look at, you are actually in a market where markets are making a new high. There's a lot of caution on the street. Everyone is worried about valuation. Nobody wants to commit large capital, excepting that, halabulu, what is happening in the IPO market. So that's where we stand. The other interesting data for me is that FII versus DII. And we had a jumbo data on Friday. And that jumbo data again connects with what we were discussing, that are we at that turn in terms of FI flows. Look at that tall number. It's such an impressive number. Vanguard, which is one of the largest emerging market funds, one of the largest asset managers in the world, I think there are multiple block deals. So it really could be in contribution to that. Bottom line here is that are FIs coming back? If they are coming back with a vengeance, then you are actually in a position to see large outperformance and large cap outperformance, which I think is getting evident. I mean, I was just thinking through it that what is that one color which will always charge a bull, and that's red. And that is the Indian bull for you. Every time you see a red on the screen, they just come back.
Yeah,
and
I guess that's the strategy, right? You continue buying on dips systematically.
So you will have to be with large cap stocks now, because not everything in mid and small cap is bad.
Yeah,
but
be conscious of the sectoral churn and be guided by what the screen is telling you, which is a tilt towards large caps.
So if you bought anything in mid and small cap stock, didn't matter what you're buying.
Yeah.
As long as it had a prefix or a suffix space to it, you made money. That was a rising tide phenomenon. That is not really the market what we are in. There is a visible outperformance in large cap stocks, and especially FI dominated stocks. There is a visible outperformance and visible underperformance in some of the FI dominated, some of the retail dominated mid and small cap stocks. And if I give an example of what's happened to Vodafone, Yes Bank and Suzlon, I think the data is there. So what happens for next 10-15 days? See, next 10-15 days, we are not in for a lot of news flow, but we are in for a lot of data points. And those data points will essentially come from the festival season demand, monsoon effect, Coldplay urban consumption, what is happening to hotel sales, which way Diwali Dussehra sales are moving. So I think that in a sense is going to be an interesting space to watch in terms of data points. Earnings season starts in October. But before that, the entire Diwali Dussehra data points would start. So next 2 or 3 weeks, it would be centered around data points of festival season, car, auto, travel. Then flows, especially around FIs. And third, it really would be small and mid cap stocks where you may see some technical adjustment now.
If you like this video, then like, share and subscribe to ET Now.